Hello guys, welcome back to another video on my channel. Today we are going to have a look for a nice trade setup. I am eyeballing it as of right now. It is a short setup that is quite likely to happen in my opinion, and I'm going to show you why. Let's first look at the horizontal levels. As you can see, we are at the Fibonacci retracement level of, or the golden pocket of the 618 and the 65 of this swing high right here. Hold on, I'm gonna show you. Yeah, this swing high right here to the swing low. So it is a very significant level. On top of this, we have the 38.2 Fibonacci retracement level from the all-time high to the low we just put in. So this light green level over here is quite significant as well. On top of this, we have a significant daily resistance right here. So the light blue line, light blue horizontal line over here. Which you can see from right here. We bounced off this level 1, 2, 3, like it was support and resistance a lot of times. As well as we are having another daily resistance level above. So around this area right here. And if we like to grab some liquidity and stop out some traders, we could also go up and penetrate this level right here to stop out some shorts. As well as, very important, now I go into more detail. If we have a look, I drew this red box as this area is the area I'm looking for to take the short in, because one line I forgot. This high right here we put in is still not has still not been violated. So if I put in the high was, yeah, this is liquidity. So liquidity means if we penetrate this level, there are a lot of short sellers who will get stopped out and who we can grab the liquidity of, penetrate the level to just reverse from there. So my idea is that we come up to in around this area, the red box, because there are a lot of levels where we could find resistance of. First of all, we can grab the liquidity, just wick. Hold on, I will draw it out. I'm well prepared. Okay, yeah, we have a brush here. To just stop them out right here, I will take another color. To just stop them out and reverse from there. But we can also go a bit higher and touch the daily level right here, touch the weekly level, plus the Fibonacci retracement level, the 3.8 from the all-time high to the low, or even grab the liquidity of that high right there. That would go hand in hand with this very steep trend line, this one, the pink one right here, which was support for this uptrend, and it would make sense to come up to this level, retest it as resistance and go down from there. But I think my most likely outcome for this is to just violate this high right here to stop out some people and find resistance in that lower area right here. Also, of course, why I think we should reverse from here is we are creating a bearish divergence on the 4-hour chart and also on the higher time frames. I think 12 hour, not really. I mean, the daily and the 12 hours, so the higher momentums are quite overextended. If we look at this, we had a very steep momentum wave, and we just climbed up, climbed up, climbed up. So I think, in my opinion, there's room to the downside, definitely. On the 12 hour, we are in the overbought region as well. And on the 8 hour, 8 hour and lower, we see that we would create a bearish divergence, because if we pump up from here and create this higher high, we will definitely create a bearish divergence where the price is making a higher high, but the RSI and the momentum waves on Market Cipher are creating a lower low. So that is quite significant, as bearish divergences on the 8 hour and lower time frames, you can see it, on the 4 hour as well, it will happen, are quite strong and significant. When you even so it is the bearish divergence on the 8 hour and lower time frames. We have a lot of resistance levels right here which are significant, and we are quite overextended on the daily chart. Plus, we could stop out some short traders who are just getting hunted on this pump up. So there's a lot of confluence. Like, if I look at this and see the price going there, there's like so much more bearish things going on the chart, in my opinion, than there are bullish things. So I think it is highly probable that it would play out, that I can draw it out for you, that we come up here in this box, find resistance and dump from there. And as targets right now, I'm eyeballing this level right here, where I drew the green box, because it is the previous, it is the 38.2 Fibonacci retracement level from that low to this high. If we do create a higher high, then it will get shifted, of course, because the high is then a higher high, and then as you can see, if I draw it higher, then it will adapt. So I can see us, if I just improvise and say it will go there, and then it adapts. I think there's some nice confluence in around that area, because we have some quite visible, clear support in this area right here, where the price from the last range, this was our last range, this was the range before, that the price would find support in around this very value area low, so the low of the range, and find support from there and go up from there, or even come down to this range, but I don't know yet. There's no edge to be had. There's no you can just speculate on there, but I'm pretty sure that if the price comes up here, it is quite likely to come down. How low we don't know yet. It might just even find support in around this high area. Okay, that can happen, but it's still a risk worth taking, in my opinion. So I think that brought it to the point. If you enjoyed this type of content, please leave a like, a subscribe, or a comment. If you have any questions, I'm happy to answer them regarding my strategy or my thought process. But I think I explained it quite in a understandable way. Thank you guys. Bye bye. Thank you for watching.